Assalamualaikum and hi everyone. Bank Islam Malaysia Berhad or BIMB was established in 1983 as Malaysia's first Islamic bank, fully operating under Sharia principles. It was created to offer an ethical alternative to conventional banking, and today it's a leading player in the Islamic finance sector across Southeast Asia. For over 40 years, BIMB has promoted financial inclusion, community development, and value-based intermediation. Its key products include home financing through BIMB Taman Ajil and Musyarakah Mutanakisah, as well as investment accounts based on Mudarabah and Wakalah. BIMB also aligns with global standards like Basel III, showing its commitment to stability and compliance. This report focuses on BIMB's financial performance from 2022 until 2024, using ratios like capital adequacy, liquidity, profitability, and leverage to assess its resilience, efficiency, and ability to generate sustainable returns in a challenging global economy. Let's begin with capital adequacy ratio (CAR) and common equity tier 1 (CET1). In 2022, CAR was 18.96% and CET1 was 30.15%. This increased to 19.38% and 30.61% in 2023, and slightly changed to 19.48% and 30.33% in 2024. These ratios are well above Basel III minimums, which are 8% for CAR and 4.5% for CET1, showing that BIMB is strongly capitalized and able to absorb financial shocks, support operation, and maintain confidence. Next is current ratio, which measures short-term liquidity. BIMB's ratio dropped from 1.39 in 2022 to 1.27 in 2023 and 1.16 in 2024. Though declining, it remains above 1.0, meaning BIMB can still meet its short-term obligations. This downward trend may reflect rising liabilities or asset reallocation, and is essential to monitor this under Basel III's liquidity coverage ratio standards.
Now, the quick ratio, a stricter liquidity indicator. It was 0.1 in 2022, dipped into 0.089 in 2023, and rose slightly to 0.11 in 2024. These low values are typical in banking, especially Islamic banks, where assets are tied in long-term financing and not liquid securities. Still, BIMB must ensure compliance with liquidity coverage ratio and net stable funding ratio under Basel III to maintain short-term funding resilience. BIMB gross profit margin show an improving trend, which are 44.3% in 2022, 45.5% in 2023, and 47.7% in 2024. This reflects increased operational efficiency, better cost control, and stronger income from Islamic financing, which is BIMB's core business. The net profit margin remains stable, which 11.9 in 2022 and 12.2 in both 2023 and 2024. This shows BIMB effectively managing costs, taxes, and risks. Stable margins like this are key to maintaining long-term shareholder value and ensuring sustainable profitability.
Let's take a look at BIMB's return on assets. It rose from 0.55% in 2022 to 0.61% in 2023, before slightly dipping to 0.59% in 2024. These are healthy levels for a bank, especially one like BIMB that deals with a large, long-term Islamic financing portfolios. It shows that the bank is using its assets efficiently to generate profits. Now, let's examine the return on equity. It improved from 7.23% in 2022 to 7.47% in 2023, with a slight decrease to 7.46% in 2024. This shows consistent returns to shareholders over 3 years, aligned with the bank's cautious risk management and Sharia-compliant approach. While the ROE is modest, it reflects the stability and ethical framework within which BIMB operates. Moving on to the debt ratio, it remains stable at 0.924 in 2022, 0.918 in 2023, and 0.921 in 2024. In banking, high debt ratios are normal as customer deposits are recorded as liabilities. This figure shows that BIMB is primarily funded by deposits, which is expected in Islamic banking and does not indicate financial instability.
Bank Islam's debt-to-equity ratio remains high from 2022 to 2024, ranging between 11 to 12 times, which is common in banking due to high leverage operations. Under the Basel III framework, banks are required to maintain strong capital to absorb risk. The slight improvement in the ratio reflects stronger equity and a sustainable balance between debt and capital, aligning with Basel III's goal of financial stability and capital adequacy. In evaluating the leverage ratio, we observe a steady decline from 13.41 in 2022 to 12.67 in 2024. While this indicates a slight reduction in capital efficiency, BIMB's quick ratio remains well above Basel III minimum requirements of 3%. This reflects strong capital adequacy and a conservative risk profile, ensuring the bank is well positioned to absorb financial shocks while maintaining investor confidence. Bank Islam Malaysia Berhad (BIMB) has shown strong financial stability with CAR and CET1 ratios exceeding Basel III requirements, ensuring a solid capital base. Profitability remains stable with healthy ROA and ROE reflecting efficient use of assets and equity. While the bank managed high leverage well, its low liquidity ratios could pose risk under economic stress, and more transparency on non-performing financing will be beneficial. So, to ensure long-term resilience, BIMB should improve its liquidity buffers to strengthen short-term financial stability. Second, the bank needs to diversify its income by expanding fee-based services that are less sensitive to profit margin fluctuations. Lastly, enhancing risk management is crucial, particularly in monitoring credit and operational risk amid global uncertainties such as inflation, rising interest rates, and potential defaults.